RBC Capital Markets co-head of Global Financials Research, Gerard Cassidy, joins us here at Post 9. Gerard, they are trading at a price to tangible book value of around 2 times now, which is a lot higher than at least I can remember recently. Why isn't that a concern to you in terms of your belief that they can continue to outperform?
David, it is a higher valuation than we're accustomed to, but I always go back to the early part of 2018 when we had a cyclical high for the banks. We can't really use valuations pre-financial crisis because the world has changed for the banks, as you know. So when you look at the cyclical highs in the January of 18, it was 2.2 times tangible. So I think there's still room up. But more importantly, the regulatory outlook for this group is the best that I've seen in decades. And those changes will make the industry more profitable, which could lead to even higher valuations.
All right, so the regulatory outlook, give us some specifics in terms of what's so favorable.
Sure. As you know, the new vice chair, Bowman, has come in, and she's not as she's suggesting they're not going to be as onerous. Treasury Secretary Bessent has also expressed his desire that the banks get more involved in the U.S. economy, and the regulators are going to be just less heavy-handed. So the Basel III Endgame proposal, which came out in July of 23, was very onerous. That has been retracted. A new one's coming out we think, by the end of the year, which will be less onerous for the big banks.
Do you have, of the current Fed chair contenders, have a list of who might be best for the sector and worse?
Yeah. I think all of them will be positive for the banks.
Naturally.
Because I think what this new Fed chair, whoever is selected by the president, obviously they want economic growth. And if the Fed can orchestrate maybe lower interest rates without having hyperinflation or elevated inflation, that would be good for the banks.
Right, but you haven't picked one as being...
No, yeah.
You think supervisory gets enough attention in a new chairmanship?
I think it does, because the vice chair of supervision has already been put in place, and they will lean on her, I think, for leadership in that area.
Yeah, they've been excited about that. All the banks have done well, but there is this discrepancy in performance. For instance, Citigroup is up like 40% this year, and Bank of America and Wells Fargo are up 14% this year. So why the difference, and where's the opportunity?
Yep. Citi is still a turnaround story. And when you think about how they've been successful in exiting certain unprofitable businesses, they are very focused on driving profitability, making that company more easily understandable. They're going to be selling off their Mexico. It's working. They're doing a good job in that. They started, obviously, at a big discount to book and tangible book at the start of the year, so they were a cheaper stock. It's more of a trading stock that investors have had great success with. So the risk on banks are working well, and that's a classic one.
We are entering a period where rates are going to be lowered. We'll spend endless amounts of time talking about just how much in the coming months. But what is going to be the impact on the universe of banks you follow? Yep,
it's a great question, David, because the rate environment is probably one of the best that we've seen in quite some time. If the Fed cuts 50 to 75 basis points over the next 3 to 6 months, the Fed funds rate will be obviously about 3.5%. Long end of the curve could be 4 to 4.5. To have a steep yield curve with a Fed funds rate above 3%, it's been over 20 years since that. So remember, banks have these low-cost deposits, and if you've got a 3% or 3.5% Fed funds rate, you're lending at 6%, and your cost of funding is close to less than 1%. Very profitable for the banks.
Finally, do you think Goldman's run is over?
I don't think it's over, but boy, there's a lot of optimism, rightfully so. Goldman's doing a very good job in the capital markets. You guys have seen all the IPOs this year, the merger and acquisition activity, so they have clearly benefited from that success.